Good evening, all. Ira Epstein with your metal market wrap-up. In this wrap-up, I'm a bit late tonight. It's right after 7 p.m. Central Time. And we are dealing now with the metal market in this update, and it is Monday, the 26th of June, 2023. So when looking at the metals, a bit of a down still disappointment. The market is fighting the headwinds of still interest rates that aren't breaking, a dollar that's relatively stable here. Not strong, stable's a good word. We have central bankers meeting in Portugal right now, and they're from Europe, and they're basically deciding strategies for what the banks are going to do to fight inflation, capital requirements, the like. So be aware of that because they can spring surprises. You already saw the event that took place in Russia. I personally am of the opinion it was a failed coup attempt. I think that as the Wagner Group was marching through Russia to the applause of people and the army backing off at roads, not really confronting them, I think had the military leaders embraced him, that might have been the end of Putin. They did not. And I think when the group realized, the leader, Prigozhin, I think that's it, he scooted, turned the group around, went back, and at first they said they brokered a deal and there'll be no charges. Nonsense. Putin is ruthless. He's a KGB guy. There's no such thing as that. He couldn't even control it through tonight. He already took to the airwaves without mentioning anybody, that group, and blah, 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 and they mutiny and what went on. So we will see what the consequences are. But the good news for Ukraine is maybe it takes that fighting group out. In other words, while they're in Belarus, maybe they disband. Maybe they go somewhere else. Don't know. At first I was nervous that they'd go there under like a cloak and then attack from one side. But the more I'm seeing this, I'm just wondering, you watch too many movies, you figure these things out. I'm not a military guy. In the gold market, you can see what I am as a chartist. In any way you want to look at it, gold has a headwind, and the headwind is high interest rates, a strong dollar, and central banks committed to fighting inflation. So they're beating gold down as they work in that inflation story, and the market is in a downtrend. You have lower highs, lower lows, that's bearish. You came up, you've had a couple of challenges that have all failed at the 100-day average and the 18-day average, and now the market has embraced the downtrend. A possible number, and I've mentioned it last week and I'll mention it again, could be the 1900 level, the 200-day average. You already hit the Bollinger Band. You get under it a few days, you move to the right, and if you move back onto it, it's just a sign that it wants to grab on and drive prices even lower. What it has going for it potentially is the market's not trying to embed yet, where both these numbers are getting under and staying under 20 and going sideways. So they're in oversold territory. Oversold territory generally doesn't get a lot of people interested, at least I've learned that, to add new money. Embed, and it does. It switches the game around. The gold-silver ratio, silver's correcting a bit, which means it's probably stabilizing against gold, and I think you see that. And the reason, it's made its first test of the 200-day average. That's what this gray line is. Yes, you played with it last week for a couple of days, and you're still playing with it right there. Will it give ground is going to be the big question for the market. In the copper market, you made one run up to the 100-day average in the Bollinger Band, and the pros hit it. I was here with you talking that I thought that could be a problem. As you could see right here, you had an embedded reading that you lost. This is what if you go to my website and you look under education, look at the enhanced Bollinger Band course. This is the reading, and when that happens, you're looking right away for these key averages to be hit. Unfortunately, it all happened in the same day. Otherwise, I'd have been all over this market telling clients, hey, maybe there's a short play there. You didn't get a chance to do it. Could it go to the lower band? It could, but it's already come down so hard, it's probably not the place to be in the near term. The platinum, I have been in the bear camp for a number of reasons, primarily being you don't need as many catalytic converters. As we make more and more electric cars, they don't take that same piece. It's interesting what they're doing is they're stealing these things in Chicago. They're telling people to go under their cars, paint them certain colors, all kinds of crazy things so that they can find them. And they're not going to return them, I hope, to you, but they'll get the guy that stole them and say you've got stolen property. I can't imagine you're going to get your catalytic converter returned. You still have the bearish reading until this red number closes over 21. I contend that when you get rallies, if you take that course, you're looking to be a seller on the rallies. In addition, do you notice you had the 18 get under the gray, the 200 back here, and now you're going down for those lows. In the dollar index, the big resistance is here. The combination of the 100-day and the 18. Now, have we been under the 100-day to call it resistance enough? I think you have all back here. You got over it, couldn't stay over it. So I'm looking for the resistance area again there. Is there a trend at work? There really isn't. There's not much of anything going on there. Now, as you know, I've been talking, and if you watch my stock reports, I did a stock report now on Lucid. And in the report, I cover in detail the daily charts, build you everything on them. Then I do the same with the weekly. I show you the current fundamentals that are at work in the chart. Remember, they just got another $3 billion from the Saudis. Now the Saudis have, with their fund there, $9 billion invested. Aston Martin joined in with them. They want to get drivetrains. So I think the problem for Lucid is getting the factories up and going the way that they should. Their cars are neat. When you read the reviews in Motor Trend and other places, they're stellar reviews on the car. They just can't get enough of them out, so they're burning through the cash in a big way. That's not the best thing. And Aston Martin's $232 million. It's not going to last very long for what they want. The idea there is they want drivetrains. They don't want their cars. And so Aston's figuring out where to go for its next set of luxury car. That's what they are. Lucid's a luxury car. How do they tie the two together? Might be a good move without spending a lot of money. Helps both companies. Very, very interesting if it all works out. To get this report, go to iraepstein.com. It's video. And when you're in the top, go to Ira Research. You will see it drop down in the box there. You can click up here. It will take you there as well. I'm Ira Epstein. You have a great day. I will see you all tomorrow.